47-year-old, 52-year-old, income, expense, debt, cash flow, doesn't have a big portfolio yet. There's some death benefit. Here's the framework. I'm looking at the person's age. I take gross income. This number is technically net, so I'm underestimating the number. Okay, this is a case in action, in real time. You take that number. In the insurance industry, for the carriers that provide life insurance, there is a income multiple that they use based on your age and health. The younger you are, the higher the multiple is. The older you are, the lower that multiple is. Typically, that this range of multiple is between like 10x, 15x. Sometimes could be a little bit higher. So I'm going to use between 10 and 15x multiple to determine a fully insured individual. What would be considered fully insured on a 47-year-old married male and a 52-year-old married female? Make sense? So I'm going to use the 15 number as my max. And the goal is we want the death benefit that we obtain to cover all debt that you carry at present time, burial expense, and income replacement for at least 7 years or more. The longer you go, the better, obviously. But preferably, if there's a 7-year plus window of income replacement for that spouse, that is extremely helpful for any widow, male or female, in that circumstance, in that situation. So that's the standard that I have, that I like to solve for, and we're gonna see if we get there based on what I just did, right? And again, this is ideal. Not every time is that going to be the case. So we're looking at the most important things, which is, well, we definitely want to cover burial expense. And when it comes to covering debt, debt can sometimes die with the individual, certain debts. And then there's other debts, depending on the situation, that may not make sense to pay off right away. The example I gave earlier of the client I have, where her mom just graduated Earth last month, mom left a property and it has debt on it. They have a death benefit mom had on herself, coverage about 55,000 or so. They could take that 55K and wipe out the majority of mom's mortgage debt, but would that even make sense? No. You could just carry that mortgage payment, take that 55K, and we can invest it, do other moves to fortify your current financial position. So there's things like that when you're conversating, when you have a financial professional who can process these ideas while you're mourning, is an extremely undervalued position to have in that scenario. Again, thinking about forever. It's not just about the money, but it's also about the process. Like, dude, when someone dies that you love, you're not going to be thinking, how do I pay off this mortgage and this and that? No, you're crying, you're tearing up, you're praying, you're mourning. So being able to have a financial professional come in, like myself, who is not emotionally attached to that person that passed away, can step in and with love provide that strategy. Say, hey, I'm going to take this load off you, mom. So the client that I'm talking to, mom, I'm like, I'm going to take that load off you. Let me strategize what to do with that 55K. I'm going to present a whole entire plan. All you got to do is click, 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 and just follow through. You don't got to think about whether it's going to work out, because I'm doing it for you. I'm proving that it's going to work out. I'm providing it for you. You mourn, you pray, you spend time with the fam, spend time with God, hold the faith, stay steadfast and true, or delegate the financial stuff to a professional that you trust. How do you find a financial professional that you trust? Well, when we have conversations like this, and when you start looking into it while living, you're able to build that trust with someone in the event something happens to you. Over the last 8 years, that's what I've done. I've built a very, very strong relationship with a person named Daniel and a person named Caleb. And preferably, you want that professional to be younger than you or around your age, but not too much older than you. Because if they're significantly older than you, what are the chances that they pass away before you? So if you lose that person that was supposed to kind of look after your family, that could be an issue. So you don't want that. So ideally, when you're thinking about who do I trust outside of blood, family, that can come in as an advisor, a trusted advisor that can advise the surviving family members that is close to my age, preferably younger, where more than likely that person will outlive me. That's the idea. Okay. So I'm really young. It's hard to solve for that because most qualified financial professionals are typically going to be, older, more seasoned, more experienced, been through it, done that kind of thing. So I don't have a choice but to go with someone older. In this case, I found a guy named Caleb who has a YouTube channel you may have seen before. He runs Better Wealth. He's exactly my age, married, but he's operating at a much higher financial level than me. So I trust him and we have a personal friendship and relationship. He knows my wife. He knows my vision and desires and goals, what I would want for my audience, clients, all that. He would have the capacity to take you guys on as his audience and continue to support and provide. And then Daniel, who's almost got like almost 5-7 years on me, a little bit closer, but he's older, also operating at a very high financial level and knowledge, wisdom, I trust to say, yep, when my wife calls, I already know you're going to take care of everything and make sure she's okay, family's okay, everybody's good. You know what to do. All right. Very, very important stuff. And again, you can leverage me. I'm always going to be a resource. This is where God has me. I'm not going anywhere. Like, this is what I'm going to do for the rest of my life. God already made it clear to me. So I don't have to guess anymore. I don't have to wander and ponder, oh my God, am I doing the right thing? Nope. Pray to the Lord, he answered. He's pretty straightforward. He gives us the answer clearly. We often get in the way of God's voice because we don't know how to often just sit still and listen. And that's such a good skill to have. Just be able to sit and listen to the Father speak to you and guide you on what you need to be doing. But when we try to do it, we get involved in all the noise, the geopolitics, the local politics, the family issues, chasing rate of returns, and that just clouds your vision, clouds what God has for you. Versus just read the word, pray, and sit and wait for the answer. It's quiet, simple, straightforward. So let's go. 5,500 times 12 times 15. That's the formula, right? So you take the income times by 12 times by 15. You get $1.2375 million. Would be considered fully insured for this 47-year-old married man. 1,237,500. Okay. What we're looking at right now, what I'm getting ready to present to this family, is getting the higher coverage on the higher income earner. That makes sense. And we're looking at convertible term life insurance, looking at a company called Lafayette, has tons of living benefits that comes with their term. Looking at a 20-year term, the monthly premium that I have quoted is $124.95 per month. Death benefit of $1 million. Okay, so $1 million. Husband's got 100K. So far that's 1.1 million total death benefit, short about 137,500, according to my very own math. So the way that I'm kind of running the numbers, just kind of looking at their situation, my goal is not to strip too much cash from their current cash flow situation, and also just being very reasonable. Like, this isn't a set in stone number. 1.2375 million, let's just say that's preferred, that's ideal, that's like fully covered for this family. So with 1.1 million, let's kind of run the math on what that would get this family. Let's say 1.1 million covers all that debt. Not to say that we have to pay it off. It really wouldn't make sense because it's a rental property that's producing cash flow, so it's not going to be an issue for the wife. If husband passes, I'm still going to throw the number in there. Let's say burial expenses, you go all out, it's like 50K. I think that's a big number. I think it could be way less than that, but I'm just throwing out a number. 50K for burial costs. And then let's see the income replacement from that. Mind you, death benefit is tax-free, so there's no taxes on a life insurance payout. So this is two policies because you had one here and then one there. So 1.1 million would get paid out minus 254.6 minus 50K burial expense. We're left with 794,400 and divide that by his income, monthly income. So that would be 144 months of income for the wife. Income replacement, divide by 12, about 12 years. So I could go lower in death benefit, make this cheaper to have him have a little more cash flow, the family a little more cash flow, and still have plenty of years of income replacement according to my standard. So notice how if I was seeking max commission payout for Denzel, then I'm gonna sell it to say, hey, full coverage is 1,237,500. Your cash flow's here. We can afford it. Ready to go? Sure, Denzel, I trust you. As there's some advantage to that, no doubt. But for me, I'm often taking off my insurance license hat and I'm becoming a customer. I like to really put myself in my client's shoes for what we're trying to solve for and how we can get like the best of everything and still like have the results. So notice how I'm already $137,500 short of technical full coverage according to my own math of human life value. 1.1 million covers our debt, covers burial expense. You could even go all out, do 75K, get him a house, 100,000 or more, whatever the case, and still have 10 years or more, 9 years of income replacement. And that's a lot of years for wife to either she could stop working for obviously for so she could cut off her income. Let's also take that into account. Are you going to just work next week if you lose your spouse? No, nobody does. People take a leap of absence. Some people quit altogether. With 1.1 million, we could solve for retirement for the surviving spouse, for wife at 52 years old with 1.1 million, leveraging annuities and other moves, giving her that time to mourn, recover, and go to the next phase for her life. I'm doing that right now with some clients who did lose a spouse, lost guaranteed income in retirement, and now we're working on replacing that. So in that scenario, I'd say having at least 1.1 million or more. So this is how I would present it to the client. I show them full coverage, show them what I presented, and then allow them to really think about, you know what, Denzel, let's get even more. I'm willing to pull a little more cash flow to have even more to just really ensure wife that we can replace my income for more than 7+ years, more than cover burial expense costs, and even her ability to stop working altogether. If we did the math on that, what was the remaining number? So 1,100,000 minus 254 and then minus 50K. So 8,900. Let's say, how many years do we have of replacing wife's income and husband's income, still 7 years. So still hits my standard of more than 7+ years that she would have income replacement for. And in those 7 years, can she stop working forever? No, no. But in 7 years, maybe that rental increased. She mourned. She's able to get back into work, stay productive, continue to be a productive member of society so that she does not develop any diseases or any health concern, that she stays healthy even though she lost her partner. Okay. And maybe she either, went back into working, used that income, did different moves. Mind you, there's still 254,600 that's unaccounted for in my scenario. So if we did not pay off any of the debt of that rental property, she still has 250 grand. What could we do with 250 to create another active income stream for her over that 7.4-year period, not including any active income she would make during that time? So there's so many, additional variables that we're not even accounting for that just puts her in a safe, secure position. And it only, look, that's pennies on the dollar. What the heck is the rate of return on, 124 times 12, so $1,500 over 20 years. I pay 30 grand, a million divided by 30, that's 33.33 times your money. So I forget how to do the math on that, but it's like, that's probably, I think the way you say it is like 30 something cents on the dollar for $1 million of coverage. I'm only paying 30 cents on the dollar or less for that coverage. I think that's the way you say it. I could be wrong, but it's literally pennies on the dollar to have $1 million of coverage for the next 20 years. And in those 20 years, say the man does not pass away, I can convert that into whole life. So that's convertible term. We're able to convert that into permanent and then continue to, fund it from there, and it become a different strategy. So that's husband. Safe, covered, insured, wonderful. Now let's go to wife. So this is a layered strategy now. This is a layered strategy. We're getting term on husband, and we're looking at whole life insurance on wife. They're coming into a lump sum of money due to the sale of a house, and she's thinking about taking some of that capital and saving it using whole life insurance as her emergency savings funds, which is going to become cash value that grows on a guaranteed basis, tax-free for the rest of her life. So we're looking at a number of around $20,000 bucks. $20,000 will get me an insane amount of term insurance death benefit, but a far less amount in whole life. So we're not necessarily solving for max death benefit coverage for the least amount of expense. What we're solving for is having cash liquidity that can grow safely and then leverage that cash for future investments to build a portfolio. But the beauty here is we also get these other benefits, such as death benefit. So we do the math, 3,400 is her income times 12 times 15, 612,000 of death benefit would be considered fully covered. She has 150 grand already of death benefit. For 20 grand with a company called Mass Mutual with a policy design of a high early cash value, right now I'm quoting a death benefit of 530,000. So 530 plus 150 puts us at 680 total coverage. So according to my math, now I'm overinsured, and there's nothing wrong with being overinsured. I'm overinsured with my amount of millions of dollars of death benefit that I have. And I could probably get more, because technically, when you look at my income, my age, according to the insurance carriers, I'm actually underinsured, which means they're willing to sell me more insurance. So underinsured kind of can become a bias in the life insurance industry to basically sell more insurance because this is a business, and insurance companies want to make money, but they also have risk factors. So they'll only insure an individual up to a certain amount. That mathematical formula is determined when they say, no, we're not willing to insure Denzel because he already has millions insured. He's max, he's got the full coverage allowed. Some people literally solve for that. They try to acquire as much death benefit as humanly possible according to their age and health. And that's a smart, like, long-term thinking strategy as well, because the older you get, the lower that multiple shrinks because you're closer to mortality. Understand that? So coming back, 680 grand. Let's say she did that. Now she has a whole life and some term, 150K. Altogether, 680 grand. Let's say something happens to her. Death benefit gets paid out, 680 grand minus 254.6, okay, of debt, 54.6. I'll use the same number of burial costs, minus 50K, left with 375. 375 divided by 3,400, divide by 12. Income replacement for husband, 9 years, 9.2 years. So we solve for that as well. 9.2 years, pretty solid. Now, as a man, my personal belief, and my Father in heaven would agree with this, as men, all the men here, we're providers for our women, period. So in the event a man loses his wife, the financial concern is not as daunting as it is for a wife. When a wife loses a spouse, she also loses the delegation of financial provision for the rest of her life. Does that make sense? So in the kingdom, that's how we operate as men. I'm pretty sure everyone agrees here. The financial reality, though, is most women here in here, and those catching the recording, you will most likely outlive us men because of the way you guys typically take care of yourselves. And if a man truly does his job correctly over the lifespan, he should most likely pass away before you because he lifted all of those burdens of life onto himself. The role of a husband, as I'm reading the Word of God and as I'm observing other successful husbands out there, is they live a tougher life on a daily basis because of the financial burden we men take on is stressful no matter what. No matter how much money you make, it's always stressful. So by relieving that along with all the other scenarios of being a man provides for a woman, the ideal scenario is that the wife would live longer than her spouse. So when we look at statistics, we look at data, women typically live longer than men, more than what? 7 years. So by always solving for 7+ years, the idea is that husband would graduate Earth and then wife would live on Earth for another 7+ years, have more than enough income to supply that lifestyle, and then she would graduate Earth. That's like perfect scenario of exiting this life, is living a long, healthy, fruitful, God-fearing life. Husband goes, wife has lifetime income replaced during that time, and then she goes. And that would be perfect. That's how I would want it for me. But when it's the reverse, when husband passes away too soon and wife is still young, she now has to assume this financial responsibility of taking care of herself for the rest of her life, which she technically delegated to her husband when she was married to her husband. Okay. Versus when a man is the surviving spouse and the wife passes away, he already assumed the financial burden. So if his wife was making any kind of money at all, the way we're wired is we're just going to work. We're not going to be in fear of working as much as a woman would be in fear of working at that older age, let's say. So that's why it's extremely important that we do get more death benefit on the husband, especially if he's the breadwinner. If it's reverse, which is more rare, but I do have plenty of couples where the wife makes more money than the husband, then it's reverse. We have to insure wife more than husband because the wife was already assuming that financial provision role technically for that temporary period of time, let's say, or let's just say she just has a really solid career that just pays a bunch of money, and she married an individual that is not in a career that is of high income earning, so to speak. So we have to make sure that we insure more on whoever's making more. Simple. Everyone can agree to that. So in this scenario, wife passes away, $608,000 payout over 2 policies. Let's say he didn't pay off the debt. He still has 254 grand to work with, increases the income replacement of his wife, and he's able to continue the legacy. He's able to continue to raise the kids. He's able to increase his expenses depending on how young the kids are. He may need to hire a nanny. He may need to bring on, help with the children. Different things that may be, required without a spouse that was taking on those roles, right? So there's a lot of room for the financial capital that he would have in the event wife passes away. And so that's how I present to my clients. That's how I'm thinking before I talk to them. And then we go through it. And I just kind of see what questions they bring up, what they mention, what they don't mention. And then I try to bring up these different things. And you don't have to be an expert on really any of this. This is pretty simple, straightforward. I'm telling you the things that you need to think about that's important that you would think about when someone passes away. You're going to start thinking about burial expenses. You're going to start thinking about debt more. You start thinking about income replacement a little bit more. And now I just delegated all that. So the power of life insurance not only protects the insured individual, but it also protects that person's portfolio. In the event husband or spouse passes away, they don't need to have the feeling of selling that rental to provide for expenses. They don't need to have the feeling of dipping into their savings or retirement, however little or however much it is. They don't need to do that because there's going to be this tax-free payout that which we can use to delegate and cover all these different expenses.